Dirty dealings, corporate battles, consumer wars. This is Evening 5. The MACC is set to charge Tan Sri Robert Tan at the Kuala Lumpur Sessions Court tomorrow in relation to the 4.5 billion ringgit government fleet project involving Spanco. Tan's name was listed on the Sessions Court's registry, while the anti-graft agency has notified that a corporate figure would be hauled to court without providing details. When contacted by The Edge, MACC's prosecution head Dato' Wan Shaharuddin Wan Ladin confirmed the matter, though it is not known what Tan will be charged with. Tan, widely known as Casio King, is the first and only distributor in the country of the brand's watches and calculators. Last month, MACC Chief Commissioner Tan Sri Azam Baki was quoted as saying that the agency would call up all key decision-makers involved in the awarding of a government contract to Spanco in the 1990s, including a former Prime Minister and Finance Minister. In February, he said the MACC had already recorded the statement of a former Finance Minister with regards to the deal. A month earlier, it was reported that the MACC had raided the home of a corporate figure and seized personal and company accounts under his control, but the said assets have not been frozen. News reports did not reveal the name of the individual, but said that the individual is a major shareholder of Spanco. A company search via the company's Commission of Malaysia reveals Spanco's shareholders are Tan with a 24.65% stake, Jati Rata 46%, Datuk Sri Tan Han Chuan 14.67%, Datin Tan Ching Ching 9.68% and Min Hat Myon 5%. Lembaga Tabung Haji's newly appointed chairman Tan Sri Abdul Rashid Hussain said his main priority as he takes the helm at the Pilgrim Management Fund is to sort out legacy issues. The former investment banker did not specify the exact legacy issues that he needs to resolve, though he did highlight the importance of stabilizing its balance sheet in order to maintain sustainable earnings. Another top priority, he said, is to strengthen its investment team. The rising costs of performing Hajj is also a concern. Abdul Rashid was speaking at a press conference in conjunction with the release of the statutory body's latest financials. Lembaga Tabung Haji maintained its annual profit distribution rate at 3.1% for the fourth consecutive year in FY 2023. The total distribution amounts to 2.72 billion ringgit to be paid out to 9.15 million depositors compared with 2.65 billion ringgit to 8.8 million depositors the previous year. Tabung Haji also declared zakat of 2.57%, bringing the total payment to state Islamic religious councils to 101 million ringgit. As at December 31st, 2023, its total assets under management stood at 93.6 billion ringgit, while its fund size amounted to 89 billion ringgit. While Tabung Haji did not announce its net income for the year, its MD and CEO Syed Hamadah Syed Othman noted that its performance was driven by Sharia-compliant investments and fixed income instruments, namely Sukuk, which generated 52% of total income, while 24% came from equity investments. He also revealed that only 10% of Tabung Haji's investments are abroad, despite the potential for more competitive returns. This is in line with the strategic asset allocation set by Putrajaya and its priority to ensure safe deposits and stable returns. Department store operator Parkson Holdings announced that its Hong Kong-listed unit, Parkson Retail Group, had inked a 15-year deal to lease 18,004 square meters of commercial space in Guiyang, which is the capital city of China's Guizhou province. The company said in an exchange filing that the space will be used for a shopping centre, service projects, offices, warehouses and other projects under the Parkson trademark. Parkson said the tenancy agreement will be treated as the acquisition of right-of-use assets, which the company booked at about 57.1 million yuan or 37.1 million ringgit. The rental payable, including tax, under this agreement is 3.33 million yuan for the first year 108 million yuan per year from the second year onwards. According to Parkson, the commercial space comprises 5 stories in Guiyang's Longgang International Centre. Parkson Retail Group's indirect 60% owned subsidiary, Guizhou Shenqi Parkson Retail Development, has been operating Parkson's department store in China under a previous tenancy agreement of 20 years, and the latest agreement is expected to positively impact its future development. At today's close, Parkson's shares were unchanged at 24.5 sen, valuing the company at 281.48 million ringgit. Shares in MISC surged to a new record high after analysts said its latest contract wins point to rising demand for LNG carriers as Qatar prepares to sharply raise output. MISC rose as much as 3.5% to 7.93 ringgit on Bursa Malaysia. At the close, the stock was trading at 7.73 ringgit, still up by about 0.9%. MIDF Amanah Investments Bank, which has a buy call on MISC, said LNG future demand appears promising. It believes the request by QatarEnergy is a sign that LNG demand is poised to continue its growth trajectory in the foreseeable future. Yesterday, MISC announced that it had secured long-term contracts for 3 new-build LNG carriers from QatarEnergy. Financial details are scant, though the company said the carriers will be chartered for a firm 15 years from 2026 onwards. The deal with MISC is one of 4 signed to charter 19 carriers with a capacity of 174,000 cubic meters each, as state-owned QatarEnergy expands its fleet to meet the surge in production of LNG. Qatar is targeting to boost output by 85% to 142 million tonnes per year by 2030 from current levels. Upstream oil palm plantation company Johor Plantations Group has obtained approval from the Securities Commission Malaysia to list on the main market of Bursa Malaysia Securities. The company said its initial public offering of up to 875 million shares will comprise a public issue of 464 million new shares and an offer for sale of up to 411 million existing shares. Its MD Muhammad Faris Adli Shukri said Johor Plantations is poised to expand into the downstream segment of the plantation business and diversify its product offerings to include specialty oils and fats for food production. He said this strategic move will enhance its position as a fully integrated oil palm producer and generates more revenue across the entire value chain and positive shareholder value. The company will utilize parts of the listing proceeds to build an integrated sustainable palm oil complex while ensuring business continuity through disciplined replanting strategies. Muhammad Faris said given Johor Plantations' reputable track record and established integrated business model, it has confidence in its future growth trajectory.